By contrast, inflation could turn out to be higher if more fragmented global supply chains pushed up import prices, curtailed the supply of critical raw materials, and added to capacity constraints in the euro area economy. A slower reduction in wage pressures could delay the decline in services inflation. A boost in defense and infrastructure spending could also raise inflation over the medium term. And extreme weather events and the unfolding climate and nature crisis more broadly could drive up food prices by more than expected. Turning now to the financial and monetary conditions. Market rates have increased since our last meeting. Bank lending rates for firms have been broadly stable since the summer, after falling in response to our policy rate cuts over the previous years. In October, they stood at 3.5%, unchanged from September. The cost of issuing market-based debt was 3.4%, also close to its September level. And the average interest rate on new mortgages, again, held steady at 3.3% in October. Bank lending to firms grew by 2.9% on a yearly basis in October, unchanged from September. Corporate bond issuance rose by 3.2%, broadly unchanged as well. Mortgage lending strengthened, growing by 2.8% after 2.6% in September. In line with our monetary policy strategy, the Governing Council thoroughly assessed the links between monetary policy and financial stability. Euro area banks are resilient, supported by strong capital and liquidity ratios, solid asset quality, and robust profitability. But geopolitical uncertainty and the possibility of a sudden repricing in global financial markets pose risks to financial stability in the euro area. Macroprudential policy remains the first line of defense against the build-up of financial vulnerabilities, enhancing resilience and preserving macroprudential space. So in conclusion, the Governing Council today decided to keep the 3 key ECB interest rates unchanged. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we are now ready to take your questions.
And today the first question goes to Balázs Korányi of Reuters. Balázs, please.
Good afternoon and thank you. 2 questions, President Lagarde. The first one is about interest rates. And the question is, are we still in a good place? Whenever the interest rate moves next time, is it more likely to go up or down? Do you have clarity on that? Second question is about economic growth. Given your second straight fairly large revision in the growth outlook, is this just simply resilience to uncertainty, or should we be rethinking our entire assessment of the growth profile? And